Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we take a close look at an individual company that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to learn how Stockopedia screens for value. Joining me today is Chris Batchelor, and we're talking Codan, ASX code CDA. G'day, Chris.
Hi, Phil. Great to be with you again today.
And did I pronounce it correctly? Is it Codan or Codan?
I always call it Codan, but
okay, we'll go with your pronunciation. So tell us the Codan story. I haven't heard of this one, even though it is in the ASX 200.
yeah, it's a really interesting company. Been around for quite a long time, actually founded back in 1959, listed in 2003, and has been steadily growing. Should say right from the outset that I do own this company and have done for about 12 years. So a long history of the company. In fact, my history of the company goes back to the 1990s. They're an Adelaide-based company, and they're involved in high technology stuff, particularly communications. And my dad worked for the CSIRO, involved in research into high technology communications stuff. So he used to quite often travel down to Adelaide and meet with the founder of Codan Business and, exchange ideas, etc. And also, they both owned Mark II Jaguars, so they chatted about that too. So I'll give you a bit more of a background to the company. It has developed, first of all, I guess, if you look at the 5-year chart of this company, it's really quite interesting. It looks like a mountain. Back in 2020, they were doing quite well. They had a strong run and they got up to around $8. Then we had the old, start of the pandemic and everything crashed, including them, back to around $4. But then they went on this incredible surge and went all the way to, I think they peaked at $19.36. And that was largely on the back of gold prospecting during the pandemic. People got the gold bug and that really went very well for them. Then, of course, everything unwound, a range of factors, mainly that they derive a lot of their revenue from, I guess I should give a little bit of background here. They derive a lot of their revenue from a metal detector business. They are actually the world's largest producer of metal detectors. And a lot of those metal detectors are sold into Africa, and particularly that sort of northeast corner of Africa around Ethiopia, Sudan, that sort of area. And of course, that's a bit of a geopolitically unstable area. And so you had a whole lot of geopolitical issues happening in Africa at that time. And so their metal detector sales plummeted in that period, like the 2022 period. Got all the way back down to $4 by late 2022, and then started to steadily rebound. And this time, not quite as a dramatic a climb, but still a very solid climb. And it's, around $12.50 now. So it's been a real peaks and lows type of business. And if you've managed to buy at the lows and sell at the peaks, well, you've done quite well out of that. The business has also undergone quite a transformation in the last sort of 3 years ago. They did change CEO. The previous long-term CEO retired in 2021. And they've gone down this strategy of trying to smooth their revenue profile. And as I described there, the metal detectors can be a great business, but it's also a very volatile business. The other aspect of their business, and in fact, the area that they've been known for the longest period of time, is this high-tech communication equipment. It often revolves around radio equipment, so wireless equipment. And think about things like military applications where they need secure equipment that can operate in remote locations, law enforcement, rescue type organizations. Often these are big government contracts. Things like they're now running a lot of the 911 networks. And so they've started to really expand in this area, and they've made a number of acquisitions over the last few years and really boosted the component of their revenue that comes from that side of the business. As I mentioned, founded in Adelaide, but they're now a global business. They have 15 sites across 10 countries. Half their revenue comes from North America, about 25% from Europe. Most recently, 10% from Africa, although that number fluctuates quite a bit, and only 9% actually comes from Australia these days.
So there's quite a difference between the revenue profile of the metal detector part of the business and the high-tech radio equipment. Can you describe that for us?
Yeah, sure. So a few years ago, it was about a 50-50 split when looking at sales between the developing world and the developed world. Whereas now that has really changed and they're getting around 85% of their sales from the developed world. What that means is it tends to smooth out the revenue profile. As we described, metal detectors can be a great business, but it's also a very volatile business. Whereas the communications business, a lot of the revenue comes from large contracts with blue chip customers. And so they're very steady types of revenue. Now, during 2021, Codan made 2 large acquisitions in that communication space, a firm called Domo Tactical Communications and another called Zetron. And that's caused their revenue from communications to increase from about 30% previously to 58% at the most recent half. They've also been adding a bunch of other sort of bolt-on acquisitions. I counted 6 acquisitions in the last couple of years, all in that communication space. And they're also moving into wireless broadcast equipment. So think big sporting events, cinema, or like news, things where live action has to be reported from out in the field as opposed to in a studio. They provide wireless equipment to enable that sort of thing. They did also have a business known as Mindtech, which was, they used to develop safety equipment for inside of mines. However, that business, whilst it always sounded promising, it never really took off, and they actually divested that in 2021.
Are you picking shares on gut instinct, buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. So looking at the Stockopedia scores, there's lots of momentum but a low value score. Explain that, please.
Yeah, sure. So this is a classic case of a business that is a high quality business. And if we look at their quality score, it's 90. But that has been now recognized by the market. And so the price has risen. Also, their most recent financial results back in February, the interim results, they were very strong. And that caused a re-rating of analyst forecasts for the business, as well as a jump in the share price. And so those 2 things have really contributed to a strong momentum score. And as happens, when price goes up on a strong run, value declines, all else being equal. And so consequently, you've got that low value score.
We haven't talked much about the Stockopedia stock rank style. Why is this company a high flyer, and what does high flyer signify?
Yeah, sure. So high flyer is based on the scores in those 3 factors that we talked about: quality, value, and momentum. And a high flyer stock has a high quality and a high momentum score, but a low value score. So it basically, it's a mathematical calculation, but it comes down to this stock is clearly going really well, is a well-run business, but the value score is low. So if it was on all 3, we call that a super stock. But when it's those 2, quality and momentum, that are strong but value is weaker, we call it a high flyer.
So when we see high flyer, that doesn't mean this is a high flying stock and that you should jump in. This is a high flyer and perhaps be a little bit careful.
Yeah, it means that the price has taken off. So, I can tell you my personal strategy on this stock. I've owned and bought this stock, but I tend to buy around $3 to $4. At this price, I'm trimming. I'm certainly not selling, but I did sell a bit last week, I think it was, at around $12, just a very small amount. But to me, this is a stock that I love. I think it's a great business, but I'm not buying at this price because as a value investor, it's just too high.
So run us through the financials, Chris. What are the things that you're looking at with a fine-tooth comb?
Yeah, sure. So the financial performance of Codan up until 22 was pretty difficult to fault. Their revenue was growing at an annual compound rate of 24% over the prior 3 years, and EPS up 33% over that same period. But then 2023 was a much tougher year. The communications business continued to grow, but the metal detector revenue fell by 33%. And that led to an overall decline of revenue of 10%. Now, that came about, as we mentioned, from the geopolitical factors in Northeast Africa, as well as continued cost pressures, which led to profit actually falling by 35% in that year. But it does appear that that was a bit of a one-off, and the most recent half-year results have showed a strong rebound. The results that came out in February showed revenue was up by 26%, profit was up 24%, and this was coming through from organic growth, but also contributions from the acquired businesses that we've talked about. And importantly, metal detector revenue bounced back 49%, so that, we've seen strength come back to that market. And the communications revenue, that's up strongly at 12.5%, but again, not so volatile. Looking at your profit margins, MindLab, which is the name of the business that runs the metal detector side of things, makes a 34% profit margin, whereas the communications business makes a 25% profit margin. Or both very good, of course, but that metal detector business sometimes makes really strong profit margins and sometimes quite low. It fluctuates. Now, looking at their balance sheet, it's always important just to check the balance sheet. Their net debt has been climbing over the last 3 years, and that's because they've been using debt to fund their acquisitions. But their net gearing is still a fairly modest 31%. And in fact, management said in their most recent presentation that net debt figure should actually reduce by June of this year, which of course has passed, but we haven't got the actual results. They also have been reducing inventory. Inventory became overstocked with gold detectors in Africa, but they're gradually reducing that.
Getting back to the metal detectors, are we talking about the kind of metal detectors that you see on the beach at the end of the day, all the way through to more industrial grade mining kind of detectors?
Yeah, there is a spectrum of metal detectors. So the recreational market is a significant and growing part of their business, and that's the guys on the beach, etc. Then a big part is gold detectors in Africa. So that's small-time prospectors. You invest a bit of money in a gold detector and go out in the fields looking for small windfalls. And then they also have a mine detector. Now, when I say mine, I'm referring to like bombs planted in the ground. So they have detectors built specifically for that to help clear minefields and make places safer.
So any final thoughts in the outlook? To me, it sounds like it's not a buy at the moment, but put it on your watch list and look when it becomes better value. Is that the case?
That's the case if you think like me and you like to buy things at a low price. Many people who emphasize investing in quality stocks would be quite happy to buy it at this price. And as we can see, plenty of people are buying it. It's going very strongly. But certainly from the value investor's perspective, it's a little bit expensive at the moment. Not ridiculous, but fairly expensive. A PE ratio of 24, that's not cheap, but nor is it ridiculously over the top. In terms of the outlook, it's really strong. For this year, 2024, the anticipated growth in revenue is around 18%, and then forecasting a further 10% next year in FY25. EPS growth for 24, looking at 28% and a further 23% in FY25. So analysts within the market are really positive on this company and believe that they have a lot of potential to continue growing. They're a high profit margin business. They've got really good niches in the areas that they operate in. And they seem to have a lot of really good prospects. And from my perspective, it's just a matter of getting it at the right price.
So I love the way that we're going to finish this interview off by talking about great prospects. Thank you very much, Chris.
Yes, thanks, Phil. Always a pleasure to be with you.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.